Hello there and welcome to another video. If you want more videos like this, hit subscribe. If you have any questions, leave it in the comment section. So you've probably heard before that long-term investing is the way to go in the stock market. And it is. It's the approach I take, it's the approach index funds take, and most very successful investors has a long-term view on things. Now, why is this superior to short-term investing or swing trading or day trading or whatever? Well, I would say that the first thing is, first of all, safety. It's a lot safer. And the reason for this is we know that the stock market can go up, it can go down any given year, any given month, but we know that over the long run the stock market always goes up. So as long as you hold your investments, you can be fairly certain you're never going to be losing money. And if you take the long-term approach, you put money away that you're not going to need for the next maybe 10 years. So you're not counting on making money, you're just investing, and then in 10-15 years you will have a lot more money. So the other thing is going to be when you invest long term, you're able to create a strategy. If you invest for the short term, you simply don't have enough time to make a strategy or to see a strategy play out. So if you find a company or a sector or a country, a part of the economy which you really think is going to do well and you really like it fundamentally, it's going to take a couple of years for that to play out. If you think a company's great, well, that doesn't necessarily mean that company's going to do well the next week or the next month or even the next year. But over the long run, if a company has good management, good strategy, good innovation, healthy balance sheet, etc., it's going to outperform the rest in the long term. So this is really the way you can build a strategy, but you can only do it when taking a long-term view. Now the other thing, which is sort of the same, is predictability. You can't really, I have to focus on this one. Predictability. You can't really predict what's going to happen the next week or the next month. That's impossible. We can't predict the future. But what you can do is to look at a company or look at a country and say, this is obviously a stronger company than the rest. They have a better management, they have better margins, better products, and they just have a better strategy of to execute. And you can, with a high percentage, you can predict that that company is going to outperform in the long run, because it's pretty obvious, right? But even a good company or a strong part of the economy can take a hit next month, but you can be fairly sure that the fundamentally strong companies are going to outperform in the long run. Okay, so it's obviously a lot more predictable. Another thing is going to be, it's very cheap because you pay very little fees. Because every time you buy and sell a stock, you have to pay a fee, and every time you take profits, you have to pay tax. So actually the longer you hold your investments, the less tax you pay, because long-term investments pay less tax than short-term investments when you take out the capital gains. So it's obviously a lot more cheap, because if you just buy a stock and hold it, you're only going to pay a fee one time. If you buy and sell all the time, you'll be paying fee every time you buy and every time you sell a stock, and you'll be paying tax on the capital gain. So it just doesn't work jumping in and out of trades. Another thing is going to be a cumulative growth. The reason why investments are so good, and especially the stock market, is because it grows accumulatively, which means it grows faster and faster because it grows relatively. It grows at a percentage. So the more money you have, the more money you make. And the more money you make, the more money you have. So it's sort of this perfect circle, which is why if you just buy stocks, buy an index fund and just let it sit there, you're inevitably going to be rich. It's inevitably going to work out, because that's just how math works. It's just going to work for you. That's why we say your money is working for you, because it's just accumulating and growing faster and faster and faster and faster. And in the end, it really go out of control if you let it sit there long enough. And the last thing, which might seem like a small thing, but is really the most important thing about long-term investing, is actually dividend. Dividend makes up most of the gains that investors make. So dividend is the most important thing in the long run. It's more important than finding, necessarily a good company. So, and if you invest for a month or for a year, you're not going to get any dividend. So really let the dividend play out. Make sure you get paid every year, and over time that's going to make up a massive amount of money, and you're going to beat the shit out of short-term traders. So that's that. If you want to know more about any of these topics or investing in the stock market in general, you can visit investingforall.net.